Hey, y'alls. A Thursday, I believe. Yes, it is. Thursday, April 23rd, 2015. This is your live Forex trade strategy session. My name is Wayne McDonell. I'm the FX market strategist for TradersWay.com. Thank you for being a client. Today I'm going to try to cover Forex, energies, metals, indices, maybe even do some binary option scalping. Really, it comes down to whatever you want, I will do. I'm here to help. I'm here to guide. I'm here to teach. I'm here to slap you around when you do bad things. I'm here to pat you on the back when you do good things. I want you to succeed. TradersWay wants you to succeed. Let's think about the business model here. They invest time and money up front while you're probably trading a demo account. They want you to succeed. And when you're ready to trade real money, they want to be your business partner for the next 25 years as your broker. They want you to trade successfully and profitably for many, many years to come. And they're investing up front into you now, so hopefully you pay it back. If you're watching a video, just go ahead and give it a like, leave a comment. If you learned something today, share it with not just the world, but really yourself. Today we're going to cover mostly technical analysis, and this is the trade we left off with yesterday, approximately 23 hours ago. This was the last trade we looked at. I haven't touched the chart, and we were at this weekly central pivot point, and the orange line was the projection. I'm sorry to say that it only went up 95 pips. Oh, well, you know, can't win them all. Must have been tired. So anyways, it's on its way. That's really cool. Do you see the logical reasons for it? If you recall, this is this gray zone is a big support zone going back, I don't know, months, right? Then all of a sudden we have this big bounce at support, which is fairly logical. That's what you would want. And it made a higher high. So how do you follow up a higher high? You set up a higher low. We got a weekly central pivot point in there. Just above it, we actually have a midpoint psych level at 119.50. So all of this is kind of a zone. So you buy in the buy zone. What does the oscillator look like? Oh, it looks pretty good on this hourly chart. So you were clear to fire at will, and sure enough, it made its way up. Now, on the second chance, if I zoom in a little bit, what does technical analysis tell you? Or I should be more specific. What does price action dictate? That once you've made a higher high above old resistance, which is here, right? Resistance, resistance, resistance. That area becomes future support. So price breaks out, pulls back, and maybe, just maybe, is working its way up. Okay. Seems to me it was right around this pullback here was right around the London Open, which would have been, fairly ideal, I suppose, right? So today, let's cover things like gold and oil. We'll update ourselves on the stock market since we're going through earnings season. British pound, euro, we go through the yens, update ourselves on some commodity pairs like Kiwi's got some action going on, review the situation with Aussie and CAD. What do you stink? Smell like a... Well, let's get it on. Now, let me remind you that trading and investing is risky, not appropriate for everyone. Adding leverage adds more risk. Your past performance, good or bad, is not indicative of future results. So you might have been a hero yesterday or a zero today, but you should be starting with a clean slate. But always, always, always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Okay. So let's just kind of, oh, I guess we're over there. Beep. Oh, come on now. Should have rebooted. My goodness. Holy smokes, eh? I haven't rebooted my computer in like a month. Maybe more. I think I'm struggling today. All right, well, while it's doing that, what should we do? Well, come on, MT4. Yeah, you know what it is I think we were drawing, right? Anyways. All right, so just quickly go through the world here. On the bottom left, you see gold, and still nothing has happened. Now, if you look at our range, yesterday we were in the middle of the range, and we had two scenarios set up, right? You either sell at the top or you buy at the bottom. Seems like the bottom was tested yesterday, and we're back in the middle. That's all. Is this a good place to buy or sell? No. That's all. Wait. There we go. That's easier to see, isn't it? So we're in the process here. Well, it came down. Now keep in mind, we planned all this price action, this drop here, we planned last week, right? Can anybody confirm that? That we planned it took off to the up. That was hard to, that I don't understand. But these little pullbacks and then continuation patterns, right? So I don't want it to go up, but it's broken above resistance, so I'd be a fool to still be a bear when it's clearly making higher highs, right? Or at least a long-term bear. So look, it's come up here, and based on the 50% retracement, that predicts somewhere between the 382 and 618. And it actually went all the way, but right in here is the middle. That's the projection. As you can see, I already drew it out right about here. So, it just did what it's supposed to. It's consolidating right in the 382 and 618. Good. Well, what does price action now dictate? That price should come down, perhaps to this roll reversal area, and then continue up because it's a continuation pattern. Right? A series of, here's a higher high, higher low, then a macro one, higher high, higher low, and another macro one, higher high, higher low, and then another macro one, higher high. So what am I gonna, what's my guess now? Higher low, higher high, my friend. So that's all. I don't even want it to go up, but I mean, that's it. That's a technical analysis. So in this case, it's keeping me out of my shorts. Some people would be looking to long. Good. You certainly would be prepared to do that now. So where does that lead us longer term? One more, maybe? And if so, this is the super macro scenario that we have fibbed out. And all I'm suggesting is a double bottom up to the 382 and then maybe continue mission. Okay? In this case, approximately the 2618 Fibonacci retracement, or extension into the 382 retracement. So we're going from like nano waves, if you want to call it Elliott wave. We're going from nano waves to microwaves to macro waves. They're all in there. It's simple fractal geometry, my dear Watson. So again, if you're a bull, maybe get ready to buy. If you're a bear, just let it go higher. Stock market still stabilized, right? Just in its place. I'm okay with it. It's not making higher highs. It's not making lower lows. We're going through earnings season, and good. It's a low beta, low volatility market, which is good. I think everyone's happy with that. Might not be making money, but you're probably not losing money either. And most people are happy. Now, think about how most market participants benefit from the market. Most market participants are simply people that have jobs and $100 a month goes into their 401k. So they don't even care. They're not even watching. They're not even aware of what's in their 401k. So do they care whether that goes up or down or sideways? No. So what about the real decision makers then, the intermediaries? How do they make money? As long as you don't withdraw your money, they make money. If it goes up, they make the same amount of money. Well, theoretically, the portfolio gets bigger, right? So how do they make money? Just assets under management and a management fee. They collect their 1%. And as long as this market moves sideways, you're not withdrawing your money. And that's all they care about. At the end of the month, boom, boom. They get their $1 for every $100 under management, right? Boom, 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 boom. Hoo-ha. Yeah. As long as it, so that's why I say, that's one of the reasons I say, most people benefit with. So sideways, good enough for the clients I'd go with, is what the mutual fund managers say. Okay. Coolio. I'm still looking at this as we were at support, we made a higher high, then we made a higher low, then we made a higher high, right? And then we have had a pullback, but notice that if you take the range now, we dropped exactly 50% and we've held, okay, we've held. So this gives us, sort of the encouragement that we're still above that area and is still bullish because it's still making higher highs and higher lows. Now, I think we're like, yeah, I think this is the all-time high, isn't it? Right? Something like that. So I'm okay. We're in the middle of the range. So let's just let earnings season continue. Now, why do I constantly bring up things like mutual fund managers thinking, or what hedge fund managers thinking, or so on and so forth? Why do I do that? They move the market, for you to emulate smart money flow. Well, one of the messages I try to get across is that when you're planning your trades, part of what your plan should be based on is what you think the market participants are going to do in advance. Right? I want you to think about the other person on the opposite side of your trade when you pull the trigger. When you're long, someone else is short. It's a zero-sum game. So you can't just be, sort of selfish and just think about, I want this to go up, I want this to go up, and you're ignoring resistance. If you think about what the other market participants want, if you're a bull, you should think about what the bears are preparing to do. Not necessarily what they did a few hours ago or days ago, I mean, that's helpful, but you should also be thinking about what are they going to do next? Because everybody's got a trade ready to go. You're like, ooh, I want to buy this. Well, someone else wants to sell the rally. And if you take a few moments to think about that, you can identify those zones as well, and that helps you identify areas in which your will increase. And then you can manage your money appropriately. Hua? Okay, so in this case, it's the stock market. Well, these have different market participants than other things like currency pairs. But you should always think when you're doing your plans about the other market participants besides yourself, because someone's always going to bet against you. Okay? But you should also know where they're planning their trades, because now that's where they're vulnerable, isn't it? Okay, good. All right, so this is pound yen. We talked about this area here. If you take this old resistance now and you drag it over, what should it be today? Since yesterday was a big day. What should it be today? Yeah, very good day, right? Good thing we had it planned in advance, right, guys? This is a simple 3A2, easy money, right? Remember talking about when the fish are jumping in the canoe, you should go fishing. Okay. So this old resistance in the future turns into what? Question mark, question mark, question mark, question mark, question mark. This is where you jump in and you answer. Okay. Did you have that planned out? It's easy now, but did you have that planned out? I remember drawing the white space. Probably on Friday, right? Why you did? 1, 2, you rock. Right on. Muy bien. So let's zoom in. And oh, snap. So what's the concern on this chart? You are not alone. Thank you, Wyatt. Wyatt says I'm the best teacher. Yeah. And I heard, what's her name? Oh no, I can never remember her name. Oh, the actress from the 90s. I don't know. She just won the Sexiest Woman Alive award. And she laughed and said, that's totally not true. And I think Woody believes it's true. What was her name? I can't think of it. The one that did all the sissy girl movies. Sorry, ladies. Anyway, so I can't possibly be the best trader or teacher in the world, but maybe close. Yeah, totally, huh? I can't think of her name. Good. I probably. So anyways, the divergence stop. Well, look. Let's talk about this. The $1 million in trading is, will the top break and make a higher high, or will the top hold and make a double top? That's the $1 million question. I mean, it's double top. So what? Because when you're doing fibs, it always breaks the top and makes a higher high, right? So when do you know when to hold them and when to fold them? I mean, that's it, right? So I look at this and my spidey senses are tingling and they're telling me we're not going to make a higher high. Why? Right. YJ says what I call it is a step down. So we were riding the 21. Okay. So this here, the lower pullback, I would fire for effect and I would tell you with all certainty a higher high will be made. Okay. As long as we're above the 21, I'm bullish and aggressive. When you break the 21 and drop to the 55, I'm bullish, but now conservative, and my attitude changes, my behavior changes, my expectations change because the market conditions have changed from rapidly expansion to the upside, right, to a significant slowdown in the current trend. And I go, whoa, 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 whoa. I'm still a bull. I would still buy at that 55. But my expectations is not high. It's double top, and I would be taking profit here. And sometimes it goes higher, guys, especially right. The one, right? There's never 100%, right? I guess in Forex you say 60% of the time it works every time. So in this case, it could go higher, but it doesn't matter. One thing that is happening is risk is increasing for the bulls. And I need to manage my risk because I cannot do a darn thing about pushing price higher unless I add more and more money. But if I thought there was risk here, why would I add more and more money? I'd be taking money out. You understand the conundrum here? And because there's a master computer somewhere that, you know, manages the laws of Fibonacci for all of us to see, no, people either shorted or took profit right around that mid-cycle level, and it dropped significantly. That was affected by money going in or coming out of the market, not opinion. Okay? So, what I see here is a bullish trend that is slowing down. If I'm a bull, my risk is increasing. And if my risk is increasing, if I'm risk averse, I need to do something, right? In this case, take profit, don't worry about what happens. What if it goes up another, you know, what if it goes all the way up here? Who cares? Who cares? These extra pips above the midpoint cycle level are higher risk pips. That's not the job, right? Does your job say get as many pips as you can regardless of risk? Does your business plan say only get the high risk pips? Right? I mean, probably not. So there's a big clue here. Now, if I was a scalper or just, let's say, just a bear, I might start looking to sell. Now, a scalper would just scalp short off that midpoint cycle level because of the double top, because of the drop to the 55. Okay? They would line it up on obviously a different chart. They wouldn't, a scalper wouldn't trade off the hourly, but you could set it up on the hourly and then drop into a 5-minute. Who up? A true bear, let's say that one that wants to be short for the day, wouldn't short there. Right? If you wanted to be short today or tomorrow, that kind of thing, you wouldn't short now. What you would look for is, let's say, a drop to support. But is it, you know, we always talk about smart money. Is the money smart? Is the market market's smart. I honestly don't get smart. I don't believe in efficient markets. I believe all information is priced in, but this idea that the market's rational, let me tell you what I think. I think the market is full of idiots. And I don't care if you've got $1 billion fund behind you, you're probably still a moron. I'm shocked by this, but over the last 10 years of going to conferences and with hedge fund managers, and then seeing people on TV and just seeing how the market reacts to news events and things written in the Wall Street Journal and stuff, like, I am shocked by how silly and simple the market is, which is crazy. Because I used to think it was, the Illuminati running the world from above, right? Honestly thought this was true. That there was like this higher power, smarter group of people that just know everything and have access to everything. And it turns out it's just a bunch of, PhD idiots. I don't know. Some of them are street thugs. I mean, they're just good at raising money, not necessarily trading or investing. So anyways, long story short, it takes a while for the market to figure things out. The market, I think, is quite slow. And then once the market figures it out, then all of a sudden it's like herd mentality. Okay, and that's why you get like what I've shown you yesterday. There, 20% of the market gets in early, makes a lot of money, and all of a sudden 80% of the market figures it out like 4 months late, and all of a sudden you get this huge herd where everyone goes north. And so the smart money that's been going north for months starts to take profit, and because all the stops are close at the top, you have this big pullback, and they're always late. They're just running over here, we're running over there. So anyways, the way I see this always playing out is if it is going to reverse, you are a bear on this, it's going to come down to support first and then probably come back up and triple top. Okay? It takes a lot to reverse, guys. Now, in my book, how do I describe a reversal? Is it a V-shaped reversal where the market is so efficient and so logical that as soon as you hit resistance, wham, the market reverses because everybody's intelligent? How do I describe it in my book? Strategic and tactical Forex trading. Market reverses like an old man easing into a hot bath. You got that picture in your mind? It's important when you use neuro-linguistic programming to paint pictures. Yeah, to be just like, no more J-Lo. Yeah, it's slow and easy and deliberate, isn't it? It takes a while. You have to wait for the dummy to catch up. You don't want to be so smart that you're trying to outsmart the market, because you can't outsmart the market, really. That's part of the market hypotheses. I think there's inefficiencies all over the place, and that if anything, you have to just simply be patient and wait for the market to catch up and give it clues and stuff. But yeah, the market reverses slowly. So if I was a bear, I might scalp first, let it drop, anticipate another, and sell again here, and probably a moderate sell, right? Then what is it going to do, guys? It's going to come up. Why? Because the bulls are going to buy right. I already know. They're going to buy right there. And then what? If it is bearish, sell for effect. Because if you're a bear, obviously the bulls are wrong. Okay, and that's how you'd plan out a reversal like that. And I get that. I get all that information in less than 1 second looking at that chart. Less than 1 second, like a glance, like my eyeballs just go zip, almost instantaneous. Well, Zeal, I've been sitting in front of my charts for 8 to 10 to 12 to 20 hours a day for over 10 years, and that's when I, as far as being a full-time trader. Then I spent years as a when my funny story is when I had a day job that I would wake up and I'd trade my my account for several hours. Then I'd quickly shower and shave and put on my suit, get in my car, commute to work. And this was when cell phone apps were, I was one of the first people in the world where PDA had a slide-in attachment for cellular phone service. So I could actually watch prices now. There were no charts at the time, but I could watch currency prices on my cellular PDA. So we're talking about before smart, okay? And I'd sit there, and every time I got stuck in traffic, I'd go refresh, refresh, refresh. I'm watching my trades, at least every minute they would update. And then I'd park my car right along the water in San Francisco, and I'd walk right past the Bay Bridge, and I'd get my Starbucks coffee, and meanwhile, refresh, refresh, refresh. I'm watching my trades. And then I'd get up to my my desk. In fact, our building was right next to the Federal Reserve Bank of San Francisco. And so I forget what floor we're on, near the top anyways. And I would set up, I'd walk through the office. We had about 300 employees. I'd walk past the office and all the cubes, my nice little office with the big 3 windows. And I'd sit down, and the first thing I'd do is reach into my bag, open up my laptop, set it on my desk, and open up my Forex trading app. I haven't even booted up my office computer yet. And I would have that, and I'd watch it all day while I'm in meetings. I had one eye on the person talking to me and on my charts, and things got blurry. That was my trading day. And then of course at the end of the day, I'd get home, same thing, refresh my little mobile computer thing to tell me prices, and then I'd watch the market when I got home. Right? Yeah. But then I realized I needed to make a decision. Do I stay vice president of this firm and continue to carry out my dream job? Because that job was awesome. I loved my job as a venture capitalist. Loved it. Everything about it rocked, except my boss. But all bosses are like that, right? But I had to make a choice, love it or leave it, because I was starting to become a mediocre trader as well as a mediocre, employee of the firm. Because I do one thing only, and I do it amazingly, and everything else falls apart in my life. I'm a very focused person. So I had to make a choice. Do I quit Forex? I wish I could quit you. Or do I be a venture capitalist? Give up my cushy office. I had nice office decor. Had a beautiful view of the San Francisco Bay Bridge and Treasure Island. Doing the job I'd like to do, enjoyable. Right? So I quit. Was vice president of the firm. I quit and became a full-time Forex trader. Gave all that up with the benefits and all that kind of stuff. So started trading Forex by myself at home, middle of the night, all that kind of stuff, right? From 10 o'clock in the morning to 10 at night. No, sorry, 10 o'clock at night to 10 o'clock in the morning, because I lived in California. That was my trading day. That's how I did it. Zeal's like, well, how do you glance in less than 1 second, almost instantaneous? How do I get all the information? Because I've been that focused for 12, 15 years or something. I don't even know anymore, honestly. That's how. And like I've always said, I'm not like a typical golfer. There's lots of people that have golfed for 15 years and they're no better. No better. They're just as bad of a golfer as they were 15 years ago. That's not what I mean. I mean hardcore focused, always focused on improving, always focused on identifying my weaknesses and improving them. So on and so forth. And it's been a good ride. Been very interesting. It's a good gig. Like I said yesterday, guys, Forex is worth fighting for because there's nothing better. And as a professional, I've never seen anything even remotely as half of. I've never even seen anything half as good as Forex. Right? All right. All right. So anyways, so that's what I see. Big part here was we're kicking off the 55. That means it's going to double top. So take your profit up here near the psych level. And if you're a bear, get ready to sell. First opportunity would be a scalp, which would scalp a spot trade. So this would fall for, somewhere, 2 or 3 hours, whatever. And then maybe tomorrow there's a bigger sell. If you're, I'm a bull on this. It's just what I'm seeing is because we're kicking off the 55, we're vulnerable up here. Risk is increasing. And if I was down in here, I would at least, how about this? At least take half of my profit and move my stop. At a bare minimum. But you need to do something. Okay? Okay? You need to do something. And you won't do anything if you don't identify it. So like I said, you need to be able to identify your levels of risk and then take appropriate actions. Okay? Daxy. There's our, so here, look at yesterday, remember? Plan A, long it here. Look, it was long for almost 4 hours, right? And then, oh, shoot. Plan B, we're in plan B. What's plan C? No! A big fall down into here, okay? And that offers its own challenges because, yes, it's bullshit, but what'll happen is it'll come up to about here, and then it's going to fall again. Why? Oh, when I say psych level, it's psych like PSYCK, psychological level. In fact, what I mean is the midpoint cycle level. So what was it, 118.50 or whatever the number was? Okay. Yes, okay, so there's a fib of this drop. So if you were a bear and you were selling now, okay, so you sold off the top, okay, obviously there was bears, or maybe that was just profit taking, but it invited bears. The price came up, and obviously bears took jumped in at least there, right? And let's say drive it down here. So based on this price section, are there bears market? The first one might potentially just be profit taking, but what created the lower low? Probably bears. You understand? Even if the first one was just profits, doesn't mean bears. It just means a bull's getting out, but it shows vulnerability. So it comes up, makes a 50% retracement, and then falls and makes a lower low. That would suggest to me bears have definitely jumped in on that second wave. Okay? So even if bulls buy here, which I think they will, if we get down there, I think I will. Price will go up. This is I'm my ball in it. This is about 5 cents. Okay. Could be a little higher, could be a little lower. But because there's bears in the market, I believe they will short again. Why? Because they have it set up like this. Okay. Oh, it looks like I had a perfect 618. Good. Okay. So if there are bears, they will sell there. Why would they not sell there if they're bearish? You understand that logic? If you're a bear and you don't sell there, you're either not a bear or you're a fool. Mama ain't raised no fool, right? Mama didn't raise no fool. So they're going to sell there. Do I sell? Do I sound unsure? Do I sell? Do I sound like I might not be confident? Do I sell kind of wishy-washy in my trade planning? Or is it solid? Right? It's solid, right? Yeah. So that helps me. Okay, that helps me plan. I can't say, oh, well, it might go up, it might go down. Right? So I'm going to behave in a certain way. Okay? I'm going to behave in a certain way because I believe there are bears in the market if we make lower low. There are bears in the market. I already know what they're going to do before they do it. I'm already talking about tomorrow. Understand that that's probably tomorrow's or actually next week because this is a daily chart now. I'm talking next week, what's going to happen. Okay? So that's that. And that's how I interpret the data because I'm using it to identify areas where I want to take action, but I also want to identify areas where others are going to take action. And it helps me plan. And then I think what will happen is that if I'm a bull, well, if I'm a bull, of course it's going to go up. Of course it's not going to make lower lows because I'm a bull. I've already made that decision. Based on what? Based on whatever. Longer term charts, fundamental analysis, whatever. I've made the decision. That's that. Okay? And the cool thing is, if it does make a lower low, I know I'm wrong and I better reevaluate. Okay? Boy, that's weird. What's going on here? I think they... Oh, I see what I did. Yeah. All right, so how did I do here? If I recall yesterday, we were in the middle. And I talked about if it went up, that it would hold. I drew the little arrow and stuff. And that, we want to wait for a break. All right? Is that correct, guys? Sometimes we go over a lot of plans, but I'm pretty sure we were in the middle. We were talking about lower highs and lower lows. So you want to wait for it to hit the trend lines. And this is where I drew the sell, but I don't think we're here yet. I think we're kind of down in here. And that we wanted to wait for the break, but the break would not be reliable until we got closer to the apex. Right? So that until we get closer to the apex, you can buy at the bottom. And then once there is a break, you can wait for the retracement retest. So, right? Can anyone confirm that we were not up here yet, that when I drew this, this, whatever you want to call it, arrow pointing down, that we were not there yet? I don't think so, right? Yeah, all right. So good. All right. Yeah, that's how I remember it too. So it went up to 118, or sorry, 108. If you're a bear, you would sell, but I don't have confidence until we get the break. Okay? You could still sell, but I don't have the confidence. Now, what I would like is for it to come down, break, retrace, and then I would have the confidence. Okay, coolio. So that's that. So really, you could have sold it, and you'd be up, I don't know, 50 pips or something, right? Chump change. So what happened? Well, we don't really know. Just gotta wait. Cool. At least it's holding. This one we did. It's what we started with. Easy peasy lemon squeezy. And this is the one from last week. How are we holding up here? The break actually occurred 2 weeks ago. And the plan was the retracement, sell. Seems like it's still there, right? Do you think it's still valid, or are you going to buy it? Is it a valid short, or are you a buyer? Hey, Adam, are you trading every day or trying to trade every day? Like one trade per day? Yeah. Greg's using RSI. Is too weak to buy. Yeah. Yeah, I don't use RSI anymore. I used to overlap the RSIs over top of it. There was an RSI up, an RSI up, an RSI. And then I realized it wasn't giving me new information that the MACD and Stokes wasn't already telling me as well. So I dropped RSI. But you can totally use RSI. There's just another oscillator. And then I intensely studied what the math of MACD and stochastics was and realized what they were telling me. And then I altered them to give me the information that I wanted them to give me. So, yeah. Cool. So anyways, yeah, I'm still feeling pretty good about this one. Yeah. So, yeah, it's all good. Do we have news? 3 minutes or 2 minutes? Yeah. Well, Stokes, all it's reading is price's ability to make higher highs or lower lows relative to the previous candles, whatever your settings are. So that's all it's telling you. So yeah, you can use it, but MACD doesn't measure that at all. So a lot of people they say, "Oh, I love MACD," and I'm like, "Oh, great. So what does MACD tell you?" They don't even understand the math. Like, really? So you love MACD and you have no idea what the math is doing? You're like, good luck with that, dude. I would start with price action and support and resistance. And you know what? If that's all you had, you could have a trading career. If you just understand basic support and resistance and price action. The rest is just, tools. It's like, what do you need to be a carpenter? A hammer, some sort of saw. I think if you had those, you could probably get by. You could probably pick up work, right? But it sure helps to have more than that. Tony, what do you think about the Euro USD head and shoulders on an hour? We're not on the trend. Oh, it's just weekly jobless claims, guys. And then I look at the 4 hour. There's no trend. No, there's no head. Whatever you see, it doesn't exist. Okay. You can't have a head and shoulders pattern without a strong trend because it's a reversal pattern. You might see something that looks like head and shoulders, but without a strong prevailing trend, it's just you're just seeing what you want to see. It's called confirmation bias, but there's no pattern, no consistent pattern, in my opinion.
295,000 above the 287,000 expected. Continuing claims is 2.33 million above the 2.29 million expect. Power buys slightly higher.
Okay, little better than expected. I mean, a little worse than expected. Come on, load up. There we go. So no follow through here. Obviously, a bounce on the old support, which puts us range bound. It doesn't look like it wants to come down, does it? That puts it maybe up into here. That puts us in a much bigger range. So like this is an hourly chart. Head and shoulders. I don't know what you see. Maybe you see this, right? You're trading this one here, 2 here, 3 here. Who saw the head and shoulders? Where does it? I can't see it. Who said it? I can't see it. Oh, Tony. Tony, what do you think about the USD? And it showed us on the average chart. Tony. All right, so let's address this. I guess I need a circle drawing tool. I don't want it. Seems to me that when I die. So, you know what, forget it. I'll just use this one. All right. Tony, are you still here? Or did I make you mad? Some people get mad really easy. Oh, Wayne doesn't like my hinges. Tony, there he is. Okay. All right, so let's talk about this a little bit. So is this what you're looking at? That? The one in the middle? And this? Is that it? All right. That is definitely 100% unequivocally not a head and shoulders. Now, one thing is it's set up on a down move. Okay? If it was a head and shoulders, the center one would actually be on the low end, not the high end. So if you're looking at this downward move, then you should have an inverse head and shoulders. Well, here you have, let's say, a standard head and shoulders, but in a down move. Okay? So absolutely, totally not in any way a head and shoulders pattern. What you do see, and here's the thing, the big difference between a head and shoulders and a 1, 2, 3 and a bunch of other patterns, there's actually very little to no difference whatsoever. So what you're really seeing is just consolidation. Okay, but I don't have a drawing tool, so you know, I can't get into fancy drawing. But so, for example, if it was a downward move, because it's a reversal pattern, right? So that's one thing we have to understand right off the bat. It's a reversal pattern. So if the move is down, then it's going to be an inverse head shoulders. So how does that set up? Well, what happens is you hit some sort of support. There's a nice little bounce. And what do the bears do now? Sell. Okay? So it falls, but it doesn't make much of a lower low. It was supposed to make, like, let's say 382 was supposed to make a 1618 extension, but what if a 382 only produces a 1.14? And all of a sudden, like, something happened. The bears wimped out, or the bulls were too strong, or support didn't break. Somebody was defending it, but for some reason, it just didn't do the extension. Okay? And all of a sudden, you know, if you were fibbing now, this would be a 382 fib, this would be a 50% fib, this would be a 618. But what if it made 100% fib all the way back to this move? That's a huge red flag for the bears. Massive, like shields up, red alert stuff, right? But it's also blood in the water for the bulls. So what do you think the bulls do now? Well, first of all, what do you think the bears are going to do? They're going to give it one last chance. This time it doesn't make a lower low. Okay? Because the bulls sense the water, the blood in the water. They sense the vulnerability. So now what they've done is they buy at their 618. Okay? This 618 failed because the bears are not confident. But the bulls are now confident, especially after this move. So now they're going to measure this, you know, from here to here, they're going to measure that. This is what a 1, 2, 3 pattern is. They're going to measure from 1 to 2, and their guess is 3 based off probably 618 Fibonacci retracement and the previous low that started this whole thing. And they're going to now get their rally. Let's say a 6 predicts on 1382. Okay. That's an inverse head and shoulders pattern. Okay? Shoulder line is here. The neckline is here. Come on, Bubba. Okay? And the way what you do is to project it, you go from the peak of the crown to the neckline. You take it. Oops, come on. Let's do it again. You take it, and then you put it as a projection, and it should go to about there. Okay. Okay. That's how that works. So the downward move, because it's a reversal pattern, you know, so it has to be an inverse crown or head and shoulders. Okay. And of course, the opposite is going to be true. And in an uptrend, and the standard head and shoulders pattern is this one, right? Big uptrend, nice little pullback, everything's good, right? And then all of a sudden, what happens? Wimpy higher high. You're like, we're supposed to have a big rally. Wimpy higher high. Way too big of a retracement. Followed by another failure for higher high. Blood in the water. And that allows the bears to get in because they sense weakness in the bullish move. And now you got that. That's the head and shoulders pattern. What we saw was a downward move, therefore it needs to be inverse. Okay? So if you see something like this, and this is what you saw, no, hang on, that's not quite right. Come on. Should have just fired up my drawing tool. Okay, you saw something like this, right? That kind of thing setting up. That is not an inverse head and shoulders. Or it's not a head and shoulders. Okay. Now, it might behave the way you're thinking, okay, but will it do it reliably or by chance? And that's the difference, right? I guess the chart is updated and won't let me move. Okay, we'll try it again. Question is, will it behave the way you think it's going to behave reliably? And probably not. Okay. Okay. So that's just the difference. I like head and shoulders patterns after big long trends, at resistance, all these different things. My favorite of the patterns, though, is this part. Okay, this is my favorite part here. Okay, and it's really the 1, 2, 3 aspect of it. 1, 2, lower high, lower low. Okay, so what happens is you get the wimpy high, but the pullback is way too big of a pullback. To me, that shows vulnerability. So I immediately start setting up a lower high scenario for the for a 1, 2, 3, and then I sell the vulnerability. So it all starts with the pullback is way big. So it could be 100% pullback, it could be 7, 8, 6 pullback, but that shows me that the uptrend is over. I start setting up lower highs, and I'm probably short right in here, right after the right shoulder is done and down. And the left shoulder sets up differently every time, and blah, 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 blah. The biggest, most important part of it is this one. Okay? That's what sets everything up for me. When I see that, I already know what I'm going to do. That's it. That's all I need to see, and boom, I'm setting up this lower high, and I'm going to sell right in here. Somewhere between, say, it's a 50% to 618 retracement, or off the left shoulder. Either way, that's where I'm going to fire for effect. I'm going to let it all loose right in here. Okay? And the only thing I care about is that blue one. Isn't that funny? That's all I care about is that little blue one, sets everything else up. So I hope you don't mind me disagreeing, Tony, but and I went into like big, 20-minute explanation, but I'm not trying to be arrogant. I'm trying to just share what I honestly believe that I've seen in the market overall for over the decade. That's what I see. And sometimes this other one works. The one you see, sometimes it works, sometimes it doesn't. And that means your confirmation bias is going to lead you to only see when it works, which means you could get yourself into a lot of bad trade. So again, I don't mean to disagree. It's just that's what my experience dictates. I don't learn these things from a book. I don't learn these things from some other dude's DVD course. I am self-taught. So that's what the market is taught me. Bad or ugly about it. I'm just trying to share you my experience. So I hope it's helpful as well. So I got to go. This was a really long session. I apologize for that, but I do thank you for staying all the way to the end. If you are watching a video, give it a thumbs up, give it a like, share it with your friends, but most importantly, leave a comment. Okay? Tomorrow is Friday, so we'll be at fxstreet.com. You'll need to register. It's a very quick process. So please go to fxstreet.com and do that. Thank you for being a client of TradersWay. So I'll see you tomorrow. And if not, have a fabulous weekend. Again, thank you for being on my team. You keep me sharp and focused. Remember, you cannot be a master of your art until you teach. Remember that.